Top of the morning, back at it again with another one. And today we're looking at the NASDAQ. I just wanted to put this out there for myself for later as just a little something to keep in mind regarding approach for the macros. Now, for New York session, we've got the two macros. We've got the 0850 to 0910, that's the pre market one, to the 0950 to the 1010 one, that's the silver bullet macro. And of course, we have the entry pattern. But after observation, this is something I just wanted to note down for myself for future reference. Just a sidebar, I want to just quickly, something that I'm seeing panning out now. If by any chance we are to invert this fair value gap here, let me do it like this, apply default. If we are by any chance to invert this here purple fair value gap, then we're shooting for that. But I just put that there for now. So we've got the two macros, of course. I'm gonna put them. Let me do this here. Put this Alt V. So that's the first one, and as you can see, the second one, right? Let me put Alt V there. A line for there, and 910, and 9 for there. Now, those are the two macro windows you look at, right? And we do, of course, have the entry pattern. If we look to this one, just for curiosity's sake, quickly now. Wait, just real quick, sorry. Just need to do this. Out of curiosity, how long is that? Okay, that's about 90 something points. Cool. Anyway, so we had this high that formed pre or overnight, and then we struck it, manipulated, and then pushed to the downside. Just open that up. Obviously, as you know, quarterly theory, right? So now within New York session, okay, this green block here represents New York session. That's the quarter we're looking at. In New York session, of course, you are subdivided as per the different phases as per quarterly theory. If you're not familiar, it's on my YouTube channel. I've put it out before. Very good context as, yeah, we're just adding on top of things as we're going along. But anyway, New York session divided into the various quarters. The red block, that's when our first macro occurs. For the 850 to 910 one, we're just looking for the standard um, run of liquidity inversion fair value gap, right? So with this one here, this is the first fair value gap here that inverts. As you can see, that also is the one which can offer the best entry. Now, looking at this, why I think this would have clubbed me. Obviously, if you're trading as a pattern, Sachaba, you will see that in the macro window, first fair value gap to inverse, we would have looked to enter here and then have our stop loss there. But as you can see, it's a double bottom or a double top there. If we did something like this, right, bro? If we did something like this at first, if we did something like this at first, with our stop just above there, if we did something like that first, looking for a 2R calm, right? If we did something like this first, of course, initially we'd be looking at this for a stop loss level there. And then this would have been, of course, the 2R that we're looking for. Now, if we were looking at this just as a pattern trader, this is where we would have come short, right? Because we didn't get the liquidity sweep first. Good rule of thumb, wait for the entry inversion fair value gap after the liquidity sweep. As you can see, we got it there. That's what then validated the fair value gap, and then we would then enter there. Stop would be above there to the downside, looking for the 2R. Looking back at the quarterly theory, this aligns with the manipulation phase of quarterly theory. So for 850 to 910, we're just looking for this entry model. Now it gets interesting when you're trying to finesse both, right? Of course, this is still something we're studying, but for the second macro, just look for a continuation entry, right? Continuation entry. So as you can see, that's the continuation phase of the move. So prior macro would set up an manipulation, then the next macro would be the distribution or continuation in the opposite direction of the manipulation where this one happened. So here we got the manipulation to the upside, set us up to go down. We took the short, or ideally it would have been a short. And then, as per the move already framed, for the 950 to 1010 macro, we then just look for continuation. And then in this case today, there was a fair value gap that opened, right? That's what we would have used as entry. But this is still something, like I've mentioned, that we're still exploring and studying further. So just wanted to put that out there to say, yo, take a look at this for New York. Obviously, we do the standard inversion fair value gap one for the London macro, but just a good thing to note. Um, yeah, man, you can see just off of one chart, we can potentially have three trades in a day. So let's just work on the consistency and take it up from there. And thank God for the skill.